In this video, we're going to talk about cryptocurrency investing for beginners and newbies. So before starting the video, please do like the video and subscribe to this channel for future updates. Despite its well-known volatility, cryptocurrency is on fire and many investors are looking to profit on its white-hot rise. Cryptocurrencies like Bitcoin and Ethereum ebb and flow for a period before rising, as do many other prominent digital currencies. Experienced traders have been speculating on cryptocurrency for years. But what if you're new to the industry and want in? Here's how to get started investing in cryptocurrencies and what to avoid. First and foremost, if you want to invest in cryptocurrency, you must have all of your money in order. That involves having an emergency fund, a sustainable debt load, and ideally a well-diversified investment portfolio. Crypto investments can help you diversify your portfolio and perhaps increase your overall results. As you begin to invest in cryptocurrencies, keep these 5 other factors in mind. Number 1, understand what you're investing in. Understand exactly what you're investing in, just like you would with any other investment. When purchasing stocks, it is critical to read the prospectus and extensively research the companies. Plan to do the same with every cryptocurrency, as there are thousands of them, each of which operates differently and new ones are generated every day. For each trade, you must comprehend the investment case. Many cryptocurrencies are backed by nothing at all, including neither physical assets nor cash flow. For example, in the case of Bitcoin, investors rely solely on someone else paying more for the product than they did. To put it another way, unlike stocks, where a company's profits can expand and drive returns for you, many crypto assets rely on the market becoming more optimistic and positive for you to profit. Ethereum, Dogecoin, Cardano, and XRP are some of the most popular coins. Another hugely successful coin is Solana. Understand the potential reward and downside before investing. Your financial investment could be worthless if it is not backed by an asset or cash flow. Number 2, remember the past is past. Many rookie investors make the mistake of looking at the past and extrapolating to the future. Bitcoin was once worth pennies, but it's now worth a lot more. The essential question is, will that growth continue in the future, even if it isn't at such a breakneck pace? Investors consider the future rather than the previous performance of an asset. What will determine future profits? Traders who purchase a cryptocurrency today require gains from tomorrow, not gains from yesterday. Number 3, watch that volatility. Cryptocurrency values are about as volatile as any asset can be. They might fall in seconds based on nothing more than a rumor that turns out to be false. That can be advantageous for knowledgeable investors who can quickly execute trades or who have a firm understanding on the market's fundamentals, how it is trending, and where it might go. It's a minefield for new investors without these abilities or the high-powered computers that steer these trades. Volatility is a game played by high-powered Wall Street traders who are competing with other wealthy investors. The volatility might quickly crash a novice investment. Because volatility frightens traders, especially newbies, this is the case. Meanwhile, other traders may take advantage of the situation and buy on the cheap. In other words, whereas professional traders can buy low and sell high, naive investors might buy high and sell low. Number 4, manage your risk. You must control your risk while trading any asset on a short-term basis, and this is especially true with volatile assets like cryptocurrencies. As a beginner trader, you'll need to learn how to manage risk and build a strategy to help you avoid losing money. And this procedure differs from one person to the next. A long-term investor's risk management may simply consist of never selling regardless of price. The investor's long-term mindset permits him to continue with the investment. A short-term trader's risk management strategy can include establishing rigorous standards for when to sell, such as when an investment has declined 10%. The trader then follows the guideline to the letter so that a minor loss does not turn into a massive loss later. New traders should consider setting aside a particular amount of trading capital and just spending a fraction of it at first. They'll still have money in reserve to trade with if a position goes against them. The bottom line is that you can't trade until you have money. Keeping some money in reserve ensures that you'll always have a trading bankroll. Number 5, don't invest more than you can afford to lose. Finally, you should avoid investing money that you don't need in speculative assets. If you can't afford to lose it, you shouldn't invest it in risky assets like Bitcoin or other market-based assets like stocks or EFTs for that matter. Money you'll need in the next several years, whether it's for a down payment or a house or a major forthcoming purchase, should be stored in safe accounts, so it's there when you need it. Paying off debt is the greatest option if you want a guaranteed return. Whatever interest rate you pay on the debt, you're certain to earn or save. It's impossible to get lost there. Finally, make sure that any exchange or broker you choose is secure. Even if you legally control the assets, someone must secure them, and their security must be strict. Some traders prefer to invest in crypto wallet to keep their coins offline and out of reach of hackers and others if they believe their cryptocurrency is not sufficiently safeguarded. Other ways to invest in cryptocurrency. While investing directly in cryptocurrencies is the most common method, traders also have other options, some of which are more direct than others. Among them are futures on Bitcoin. Futures are another option to bet on price movements in Bitcoin, and futures allow you to leverage your money to produce big profits or losses. Futures are a fast-moving market that adds to the already volatile nature of cryptocurrency. Cryptocurrency funds. There are also a few crypto funds, such as Grayscale Bitcoin Trust, that allow you to bet on price fluctuations in Bitcoin, Ethereum, and a few other cryptocurrencies. As a result, they could be a convenient way to buy cryptocurrency through a fund-like product. Exchange stocks or broker stocks. Investing in a company that will profit from the emergence of cryptocurrency, regardless of who wins, could also be a good idea. And that's the possibility of an exchange like Coinbase or a broker like Robinhood. You rely heavily on crypto trading for revenue. Ethereum ETFs. A blockchain ETF allows you to invest in firms that may benefit from blockchain technology's development. The best blockchain ETFs give you exposure to some of the most important publicly traded blockchain startups. However, it's worth noting that these companies generally conduct much more than cryptocurrency-related activity, diluting your cryptocurrency exposure and lowering your potential gain and loss. Cryptocurrency investing FAQs. What is the minimum investment amount in cryptocurrency? In principle, investing in Bitcoin just costs a few bucks. Most crypto exchanges, for example, have a $5 or $10 minimum trade amount. Other crypto trading apps may offer a lower minimum deposit. However, if you're trading tiny quantities of cryptocurrencies, you should be aware that some trading platforms will take a significant portion of your investment as a charge. As a result, it's critical to find a broker or exchange that charges the least amount of money. Many free brokers in reality include fees known as spread markups in the price you pay for your Bitcoin. How to mine cryptocurrency. In a process known as mining, several cryptocurrencies reward users who verify transactions on the blockchain database. These Bitcoin miners, for example, perform extremely difficult mathematical problems as part of the verification process. Miners receive a fixed amount of Bitcoins if they are successful. Miners need powerful processing devices that consume a lot of energy to mine Bitcoins. To extract these benefits, many miners run large rooms full of such mining rigs. The Bitcoin system consumed as much energy as a medium-sized country as of early 2022. What are the options for investing in Bitcoin? Well, if you want to invest in Bitcoin, there are several options available, and you can work with a range of companies, including cryptocurrency exchanges. Exchanges offer the most diverse range of cryptocurrencies as well as the most competitive pricing. Coinbase, Kraken, and Binance are among the top participants, but there are many more. Typical brokers include many traditional brokers also let you trade Bitcoin alongside equities and other financial instruments. However, their range of other cryptocurrencies is restricted. Interactive Brokers, TradeStation, and Tastyworks are among the top participants in this market. Many financial apps now let you exchange Bitcoin and a few other cryptocurrencies. Robinhood and Webull, as well as payment apps like PayPal, Venmo, and Cash App are among the top participants in this space. If you want to buy Bitcoin, pay close attention to the fees you'll have to pay. Here are some more important considerations when purchasing Bitcoin. What exactly are altcoins? An altcoin is a cryptocurrency that competes with Bitcoin. Many years ago, dealers used this phrase in a derogatory manner. Everything was defined in relation to Bitcoin because it was the largest and most popular cryptocurrency. As a result, anything that wasn't Bitcoin was categorized as a resulting altcoin. While Bitcoin remains the most valuable cryptocurrency in terms of market value, it is no longer as dominating as it once was. Other altcoins, notably as Ethereum and Solana, have gained in popularity, rendering the word altcoin obsolete. With an estimated 15,000 or more cryptocurrencies in existence, defining the business as Bitcoin and then everything else makes less sense than before. So what'd you think about this video? Let us know in the comment box below, and please do like the video and subscribe to this channel for future updates.